So I post on my Facebook page a lot, and this was one of the posts about cars and why buying an expensive car with a large monthly payment is usually not a good idea. And then in the comment section, I noticed that surprisingly, there were way too many comments about how cars are appreciating assets and that their value goes up with time and they're not appreciating assets. The current market has people believing that cars are appreciating assets. The more you drive your car, apparently, the more it will appreciate. Sorry to break it to you, but this is just not true. And the current market won't last for very long. I think you might be mixing used cars with real estate. First of all, how did we even get to this stage? If you recall, COVID-19 left microchips in short supply. When the pandemic hit, a lot of these chip factories slowed down production due to worker shortages. And when these factories started opening up again, the chip manufacturers started playing catch up. And they're still playing catch up. The average used car is now 35% more expensive than it was a year ago. That means that the average car is over $9,000 more expensive in the current market environment. Prices also vary depending on where you're buying the car. For instance, Cincinnati, Ohio saw one of the biggest jump in used car prices. And even though the demand for used and new cars has dropped from a year ago, prices are not dropping because dealers continue to face low supplies for new cars. Since new cars are in limited supply, people who would usually opt for a newer car are now opting for used cars. And due to this demand, car dealers are holding prices of newer used cars high. Prior to the pandemic, nearly 76% of vehicles were priced less than $25,000. Now, car prices in this range account for less than 35% of the entire inventory. So where are the prices headed in 2022 and 2023? There are signs that prices are beginning to normalize, and it's just a matter of time until people stop referring to cars as an appreciating asset. Used car prices are artificially high due to the shortages of semiconductors. When chip production gets back to normal, and it will get back to normal, we will see new cars entering the market again, and this will refresh used car stock levels. GM said last week that it has seen better consistency in semiconductor supply through the first quarter compared to the last year as a whole. This has translated into improvement in our production and deliveries during the first 3 months of 2022. And according to Goldman Sachs, chip manufacturers are catching up to the demand, and they should be all caught up by mid-2022. That means that production should get back to somewhat normal by the last quarter of 2022. And once car makers have the chips needed to fill in orders for the new cars, new car inventories should stabilize. That means consumers who are being forced to buy used cars will return to buying newer cars, and that should calm the whole situation down. But this will not happen over time. My guess is that prices will drop by the end of 2022 and into 2023. Secondly, Americans love to finance anything and everything, and naturally, most of the cars that you see on the highways are probably financed as well. And if you did not already notice, interest rates are going up, and car sales are extremely sensitive to interest rate hikes. A higher interest rate will obviously mean that you will pay more for your financed car. And according to one estimate, consumers may purchase 500,000 fewer used cars just because of the rise in interest rates in the coming months. Millions of people who have financed their cars at these ridiculous prices could potentially find themselves underwater on their car loan when the car prices do return back to normal. Used car prices did drop 1.5% in the first 2 weeks of February, and as government's pandemic assistance in the form of stimulus checks and unemployment benefits has gone down, delinquencies on auto loans have also returned back to pre-pandemic level versus the strong credit performance that the auto sector showed during the pandemic. For cars that are 1 to 3 years old, a category that has seen the biggest jump in prices, the average cost is just over $41,000, down from $42,000 from January of this year. More importantly, according to Copilot, dealer inventories have risen 15% for car models manufactured in 2019 and 22% for 2022 models. But even with the current downtrend in prices for used cars, average prices remain elevated. The $41,000 average for 1 to 3 year old used car is up more than 50% from January of 2020, where it was close to $27,000. Used cars from 4 to 7 years old average $31,000 currently, up almost 50% from $20,757 pre-pandemic. So there you have it. If you're wondering if this is a good time to buy a new or used vehicle, the simple answer is no. If you are willing to hold out 7 to 10 months, then you could potentially save thousands of dollars. While prices have come down slightly, these prices are still at ridiculous levels compared to a year ago. My advice is to remain patient, as these prices are not sustainable. Unless you absolutely need a car, do yourself and your family a favor and wait it out. And no, your car is not an appreciating asset unless you own a Ferrari GTO 250 from 1962.